Alrighty, snap. So we got snap, and I'm on the 3-day time frame. Looks like we've got the whole history here. So this looks like the IPO price back in early of 2017. And then what I'm going to do is I'm going to anchor the wave counts down to this low. By the way, so real quick on Elliott wave, if you're not too sure, just GPT it, get a summary of it. But it's was created in the 30s, and it's been time tested, battle tested, and Wall Street definitely uses wave counts to this day. The scan that I'm going to do in a second, this is going to be the highest probability setup. So again, this is all based off math. So Elliott waves as well as the Fibonacci sequence. So let's do a quick scan. When you GPT, or maybe you remember, but when you ask GPT, Elliott waves are five impulse waves. The first wave, which is right here, which started right there, but these are always up waves. So this whole move right here is the one wave. Then on the second wave, they're always corrective. So here is the corrective wave. And then right there, this appears to be the end of the second wave. And now we are starting, this is why I got a little excited, this third wave. But again, this is not always correct, this software, okay? But so let's do a couple things. So I'm going to lock in this channel. I'm going to zoom out. I'll tighten it up here in a little bit, but I always like to see the whole history. But this is what I'm encouraged about. There's a couple things I'm encouraged about. So you see this orange line right here? So it's anchored right there. And then we've got another touch right there. It looks like it was, I don't know, just not that long ago, a few months ago, maybe April-ish of 25. Now we have another bounce, another touch right here. To have a validated trend line, there needs to be at least 2 touches, and we've got our third right now. So this is the other thing I like, is that we've got ABC in process. And so what I'm going to do is I'm going to click on this A, and I'm going to say project forward, and there's your C wave, okay? So what I'm going to share with you now too is also short term, and then I'm going to zoom out so you can see what's potentially in front of you. So right now we had this whole move, which was the A wave, and now we are coming down to the bottom of this B wave. And once I tighten this up here in a second, but now we potentially, if I add in the wave lines, right? That's where price potentially looks to be heading. And so right now, price is at $7.31. And here's what's really cool, is this also projects, see this green shaded area right there? That's the highest probability of where price is going to go before we see a pullback or a correction, right? Let's see. So I'm going to zoom in a little bit. So here's a tight shot. So here is the second touch, right? A few months ago. And then we also have a long shadow that fell outside of the channel, but it recovered nicely. And this is interesting too. This is what they call like the climax, this big selling bar, which makes sense on this ABC move. So again, the A move is right here. And then we've got this B wave down here. And now we're going to be pushing for this C wave, and this green shaded area, which is $10.13 to $10.80. This is the highest probability of where price will have a reversal, which also makes sense because we've got a lot of, not a lot, but we've got overhead resistance in this shaded area. So these fibs that I just added right here are going to act as key levels as price starts to meander its way up there. But before I start talking about, this is what I'm talking about. See, if price falls below this red line, and that's that multi-year trend line, this is awesome. This is what I'm talking about, where you can define your risk. So you make an entry here, but then you put an extremely tight stop, and I put it right below that wick right there, which is $7.12. And right now at time of recording, price is at $7.31. So that's what I mean by you can define your risk. This is your risk, is right here. That's where you sell. And then you've got all of this momentum, this push to the upside. By the way, again, this is the 3-day time frame, and I'm not going to zoom in. I'll do it real quick. Let me zoom in to the 4 hour. So I'll go to the 2 hour. Yeah, that's why I thought everything disappeared. I just did a refresh because I zoomed into the 2 hours and I lost everything. So then I brought it back to the 3 day and I can't remember, but we've got a nice green doji here, Peyton. These are typically reversal candles. So this is more validation that it's going to respect this multi-year trend line right here, right? Back to what, that 2018 low, that's all the way over there to the left. But I'll tell you, my man, I like it. Yeah, short term, I see this getting up to finish the C wave around, again, the screen shaded, but let me zoom all the way out. Okay, so I moved to the weekly, and you'll notice some of the colors change, so just disregard that. But here's what I want to share with you. If you notice this, whatever, pink right here, so this is a channel. And one thing I've learned is that channels, price action loves channels. There's channels all over the place all the time. And in this case, when price moved to the upside, it reached to the top of this channel. And then when things eventually reach tops of channels, as an example, they will eventually find the bottom of the channels, right? And then when they find the bottom of the channels, then they will push back higher to find the top of these channels. So that's why I was looking at this and I'm thinking, okay, there's a lot of room to the upside. And I'll leave you with this. Remember, we anchored it right here. So here's the one wave, right? We finished all over these years, this second corrective wave. And now here is the third wave right there, which ranges right now between 153 to 179. Okay. So you've got all this upside. The only thing that worries me is that we've got all of this supply right here where price has got to push through it. So depending on how long you want to hang on to this thing, once it breaks above this junky stuff right in here, because it's going to compete against this, because remember, price has memory, okay? But I feel really good about this push to the C wave, right? But once we get above all of this chunky stuff, which just look at this trend line right there, which is what? $16.58. Once we clear that hurdle, then I feel much better because we're competing against this stuff over here, but this was like 3.5 years ago. So with all that being said, I like it. Whatever you want to do, position sizing, I would, again, do that tight stop loss. And then as price starts to commit to the upside, then you start layering in. But this potentially could be a good one, my man. So anyways, hopefully I'm not rambling. And I love you tons and talk soon.